Welcome to Talk Tickers. We're jumping straight into the recent earnings call today.
Yeah, let's get into it.
And the big headline seems to be, well, pretty strong performance all around.
Definitely. Revenue more than doubled year over year.
Right, and adjusted EBITDA nearly tripled. Plus, subscriber numbers are way up.
Almost 2.4 million total subscribers now.
And a big chunk of those, over 1.4 million, are using those personalized solutions. It really paints a picture of a company hitting its stride.
Absolutely. Those top-line numbers are, well, quite something. Revenue hit $586 million.
Which is a 111% jump from last year.
Exactly. And the adjusted EBITDA almost tripling to $91 million. But what's interesting, I think, is the margin expansion.
Yeah, to nearly 16%.
Right. It suggests they're finding profitability alongside that rapid growth. It's not just growth at any cost.
Okay, so more efficient growth. And it wasn't just revenue. You mentioned the subscriber jump.
Yeah, 38% growth year over year on subscribers, bringing them to that near 2.4 million figure.
And the personalized side seeing major uptake. Over half now.
Over 1.4 million, yeah. So clearly that tailored approach is resonating.
And it seems they're getting more value per subscriber too.
That's right. Monthly online revenue per average subscriber, bit of a mouthful, but it's up over 50%.
Wow.
Reaching $84 per month. That's a significant lift.
So each customer is, on average, spending quite a bit more.
And at the same time, they're actually getting more efficient with acquiring them. Marketing spend is down.
Down to what level?
Down to 39% of revenue. That's a noticeable improvement, suggesting more strategic customer acquisition.
Okay, so not just throwing money at ads. What about the cash situation? That always tells a story.
It does. Cash flow from operations was solid at $109 million.
Which translated to free cash flow of
$50 million. And they're sitting on a decent cash pile, too, $323 million in cash and short-term investments.
So financially stable, generating cash. That's the current snapshot. Pretty impressive.
Very. But what about the longer view? What are they aiming for down the road?
Well, they didn't shy away from some big numbers. They reiterated their long-term financial targets.
Which were?
Aiming for at least $6.5 billion in revenue and $1.3 billion in adjusted EBITDA by 2030.
Okay, so that's a significant ramp up from today. How do they plan to get there?
They laid out 5 core growth drivers, basically their roadmap for the next 5 years or so.
All right, let's break those down. What's number one?
First up is deepening personalization. Really leaning into that, expanding from like hundreds to potentially thousands of personalized treatment options.
Thousands. Wow. So even more granular tailoring. Makes sense given the uptake you mentioned.
Yeah, exactly. Second is expanding into new medical specialties.
Moving beyond the initial areas.
Right. They've seen huge success with weight loss, obviously. Now they're launching low testosterone and menopause support this year.
Okay. Those are significant markets.
And longer term, they're looking at things like longevity, sleep, even preventative care, broadening the scope considerably.
So becoming more of a holistic health platform, maybe?
Seems like the direction. Third driver is elevating precision care, but keeping the convenience.
The telehealth advantage. How are they doing that?
Using tech like something called MedMatch and bringing in more AI tools to boost engagement and outcomes.
Okay, balancing tech and accessibility. What else?
Fourth is building strategic partnerships, creating a sort of curated healthcare ecosystem.
Like the Novo Nordisk deal.
Exactly like that. That's the prime example they gave.
Got it. And the fifth driver?
Scaling globally. They mentioned early traction in the UK, so looking beyond the US market.
Okay, a multi-pronged growth strategy. Let's dig into that weight loss piece a bit more. It sounds like a juggernaut.
It really does. Became one of their largest specialties in just, 18 months?
Incredible speed. And that Novo Nordisk collaboration seems key, offering branded Wegovy alongside their other options.
Yeah, they highlighted that as a huge milestone. And a blueprint, they said, for other partnerships.
It's a big validation having a major pharma player like that working directly with them.
For sure. It extends their offering dramatically.
And they also mentioned they're finishing the transition off the commercially available semaglutides soon.
Yeah, expect that to be done by the end of Q2. And they stuck to their $725 million revenue target for weight loss this year.
Supported by that broader range of options now, including the branded drug. Okay. What about sexual health, their original focus?
That's undergoing a bit of a shift, it sounds like, moving towards more premium, daily products and personalized solutions.
So less on demand, more continuous use.
Seems that way. Subscribers using daily options have apparently more than doubled year over year.
Okay.
And now make up nearly 40% of the sexual health base. The idea is this drives better long-term retention.
Right, stickier customers, even if it causes some maybe near-term bumps during the transition.
Exactly. They acknowledge potential near-term volatility, but are betting on the long-term value and retention.
And they did make a point, didn't they, that growth outside of the GLP-1 weight loss drugs is still strong.
Yes, good point. Revenue growth ex GLP-1s remained robust, so they're not a one-trick pony.
Diversification matters. Any other new initiatives jump out?
A big one was the acquisition of an at-home lab testing provider.
Integrating diagnostics. That makes sense for personalization.
Totally. It underpins the current stuff, but is also crucial for launching those new specialties like low T and menopause later this year. Enables the right biomarker testing.
And they hired a new COO.
Yeah, Niter Kabani from Amazon. Brings experience in scaling operations, which they'll certainly need.
Someone who knows how to handle rapid growth seems like a smart hire.
Definitely signals a focus on operational execution.
Okay, let's talk guidance. What are they forecasting for the near term?
For Q2 2025, revenue expected between $530 and $550 million.
Which is, what, 68% to 74% growth year over year, still very strong?
Yep. And adjusted EBITDA between $65 and $75 million. Yeah. About a 13% margin at the midpoint.
Okay. And for the full year?
Full year 2025, revenue projected at $2.3 to $2.4 billion.
That's 56% to 63% growth for the whole year.
Right. With adjusted EBITDA between $295 and $335 million, maintaining that roughly 13% margin.
And they expect retention to stay high.
Yeah, reiterated long-term revenue retention above 85%. That stickiness factor again.
That's crucial for the model. Okay, that Novo Nordisk partnership keeps popping up. Sounds really core.
It does. They see potential across categories, products, even different countries.
And they explicitly called it a blueprint.
Yep. A blueprint for future collaborations with biotech and diagnostics companies, setting a precedent.
Interesting. What about the peptide facility acquisition they mentioned? Where does that fit?
That seems geared towards the longevity space they're eyeing.
Okay.
Helps them develop those products and allows for more precise treatments, especially combined with the new lab testing capabilities, making things like peptides more accessible.
Democratizing access, maybe?
Yeah.
What was their stance on the personalized compounded GLP-1s? There's been discussion around those.
Their position is that personalized semaglutide is clinically necessary for some patients.
Why? Due to side effects.
Exactly. For patients who can't tolerate the side effects of the standard commercial doses, they stress they operate within regulatory guidelines for compounding.
And they see it as additive, not replacing the branded option.
Yeah, largely serving patients who might otherwise drop off treatment altogether.
Got it. Okay, shifting gears slightly. Insurance, are they planning to jump into that world?
Doesn't sound like it. They expressed pretty low interest.
Why is that?
Cited complexity, inefficiency, especially for people with high deductible plans where cash pay might actually be simpler or cheaper.
So sticking with the transparent cash pay model for now.
Seems to be the focus, yeah. Providing affordable options directly.
And what about Lilly, the other big player in weight loss drugs like Mounjaro and Zepbound? Any partnership there?
They offer the branded drugs, but through the normal supply chain. No direct partnership integration like with Novo Nordisk's Wegovy, at least not yet.
But conversations are ongoing, they said.
Correct. Doors aren't closed, but nothing formal integrated right now.
Okay. And thinking about profitability again, what's the outlook for gross margins?
They expect those to increase sequentially through the rest of the year.
Driven in by
economies of scale as they grow, plus a better mix from the growth in non-GLP-1 offerings, which presumably carry higher margins.
Makes sense. Okay, one last area they touched on was preventative care.
Right. Longevity, sleep, general proactive health. They see a big opportunity there.
Driven by consumer interest.
Yeah, growing interest in staying ahead of health issues, plus all the advances in testing and data. They definitely envision moving more into that proactive space.
A potentially huge future market.
Absolutely. All right, that covers the main points from the call. Quite a lot to digest.
Definitely a busy quarter and an ambitious outlook.
Which brings us perfectly to our speculative segment. This is not financial advice. Based on all that, what's an outrageous but plausible trade idea you're pondering?
Okay, here's one. Thinking about that deep push into personalization, the lab testing acquisition, and the move into longevity, maybe look at companies specializing in, say, advanced biomarker analysis platforms or even AI for interpreting complex health data.
Interesting.
As this company needs more sophisticated tools to deliver on that hyper-personalized preventative vision, The companies providing those underlying technologies could see a boost. This is not financial advice.
I like that angle. Okay, my turn. My outrageous but plausible idea plays off the partnership blueprint theme and the expansion into new specialties like menopause and low T.
Go on.
Consider looking at established, maybe somewhat slower growing, pharmaceutical companies that have strong portfolios in areas adjacent to where this company is expanding. They established hormone therapies, sleep aids, maybe even certain dermatology lines.
The idea being they might be next in line for a partnership.
Exactly. If the Novo Nordisk deal proves successful and sets a trend, other pharma giants might look for similar platform partnerships to revitalize access or reach new demographics for their existing drugs. You could see a sort of partnership premium emerge for likely candidates. This is not financial advice.
Both definitely playing on the strategic shifts we heard about. Plausible, perhaps outrageous, definitely not advice.
Precisely. So that wraps up our deep dive into this earnings call. We hit the key results, the strategic drivers, the future outlook.
That focus on personalization, expanding the platform, and those key partnerships certainly paints a compelling picture.
So what are your thoughts on their long-term goals? Is that 2030 target achievable? And how do you see this digital health landscape evolving? Join the conversation. Let us know what stood out to you.
Yeah, we'd love to hear your take.
This has been Talk Tickers, aiming to give you a clear understanding of the numbers that move markets. Thanks for tuning in.